We've been expecting a near-term high early February in the S&P, and we still are expecting that. Also, at the same time, the short-term cycles are still bullish for a few more days until Friday or Monday, the 9th or the 12th of February, where we could make an even higher high before the market corrects. After Monday of next week, we're expecting the market to come down into the late part of February, okay? And that should be a noticeable correction. However, even though the market is likely to correct, we're cautioning people it is very dangerous to short this market because the corrections may not last very long, they may not be particularly deep, and once they finish, they're going to shoot back up, and we expect new highs in March, probably higher highs late April, okay, before any significant longer-term correction, more meaningful correction occurs between May, June, July. In that 3-month window, we probably will have a decent size break, taking us down into the early part of the summer. And then over the summer, we should resume on our way up, make higher highs in the second half of the year. We don't know the full extent of this, but we are still quite bullish for 2024, okay? Now, we were expecting 5,000, and last week it got so close you couldn't even see the light of day. And it's still possible, by the way, the next few days we will see 5,000. This market is still quite bullish, and we expect higher highs in March, probably higher highs than that in late April, and correcting and having sharp declines and then resumption rallies and new highs. So it's going to be wild and interesting, but probably the best thing to do is to buy dips rather than trying to go short, because the trend is still up, at least until late April. Okay, that's another thing. Now, there are some interesting examples. I was looking at the astrology, and it turns out that the 30-year cycle, Saturn is in Aquarius right now in the Vedic system, and we looked at all the occurrences of Saturn in Aquarius, and they happen roughly every 30 years. The pattern recognition program found 4 examples of that are similar, very similar to the present market, high correlations, and they all call for some kind of a correction over the next 3 to 5 months, and they have different variations of it. But the one in 1994 is fairly severe. It started on February 2nd, but interestingly enough, went down until April 4th, and then it started to resume its uptrend for the rest of the year, and had another low in July, interesting. And then in 1964, the 60-year cycle, which has been repeating very closely, literally for decades. That has a corrective move in here. It has a new high in March, a low early April, and then resumption of the uptrend. And again, a little bit of a dip in June, July, before resuming higher later in the year. And then the 1935 market was 1934. It was actually a better match. It also has a sideways phase between now and early April, rallies into late April and goes down a little after that, again resuming an uptrend until late in the year. The 1906 was another bearish version. The next 2 months are fairly bearish, and even then it goes sideways for a while and then goes up later in the year. So this was the place that the 30-year cycle has its a couple of month choppy correcting move. 2 of them were meaningful. 1994 and 1906 were fairly bearish. But we don't think that that level of bearishness is going to happen this time. We think it's going to be more mild, like 1964 and like 1935. The trend is still strongly up for the remainder of the year. And if we're going to see a deep correction, it's going to happen probably between May and July, which is supported also by the 24-year cycle and a few other things. And our short-term influences, the 7-year cycle and the 2-year cycle, are also agreeing on a low in late June, early July. Okay. Another thing that's kind of interesting is that if you look at 2 years ago, there was a high January and a low February 24th, and then a high in late March. So this February 24th to late March swing was up 2 years ago. And 4 years ago, you had the pandemic crash. It came in on the 23rd of February as a high, and late March was a low. So the market has a tendency to make a move between late February and late March quite often. In the year 2000, it did the same thing. The low was in late February, and the high was late March. So we're going to have something like that this year. We're favoring the low in February, the high in March, and then potentially another high in April. But that's where the swings are, and that's where the moves are. And after it's all over, after June and early July, you can expect to see resumption of the rally up until October, maybe one down month in October, continuing higher until January. So from now, the market should be higher in January. We already talked about the 7-year cycle, 17 occurrences of that. 13 of the 17 were bullish until January. And the other 4, after a low in July, they were also bullish until January. So the structure is pretty clear. How deep these corrections will be is unclear. And I'm not 100% sure. But I do think, given the bullishness that's been there, given the sentiment, given the fact that the Fed is still promising to lower interest rates, I think the more bullish variation, which has higher prices until April, a mild correction, and then a significant rally all the way till January, is the more likely scenario than something like 1994, where the next 2 months are really nasty, and then the market recovers and doesn't make new highs until the following year. So in terms of the mathematics of the cycle work that we do, there's a 109-week cycle, which is repeating and has been for some time. We mentioned it in terms of the January of 2022 high. 540 trading days later, we have this high point right now, and it's been repeating, and it calls for a little bit of a dip. But if you look at multiples of that, 3 times that is 327 weeks, and multiples of 326 or 327 weeks align with 6.25 years, 12.5 years, 25 years. Turns out that the 25-year cycle is repeating, and that the 6.25-year cycle is repeating. And it turns out the half cycle of 25 is 12.5 years, and that's repeating upside down. So it's kind of an interesting set of mathematical configurations that are there. So we're not just using astrology here, we're actually using cycles that we have located mathematically to get the information. Turns out the astrology is also kind of intriguing because Saturn is in the same place it was every 30 years. And what's interesting is after the 12th of February, you have a whole cluster of planets in the sign of Capricorn, which happened in 1994, which happened in 1935, which happened in 1906. So you have like 5 planets in the same places, and Jupiter in 2 of them in the same place. So there's enough overlap of the planetary positions to indicate that there might be repetition of the data of the actual market itself, because the forces in the cosmos are kind of aligning the same way they were in the past. All right? So it's kind of an interesting situation that's occurring. And in each of those, there was a big rally into this February high. It happened in 1994. You had a high in rally into early February of 1994. You had it in 1964. You had it in 1935, and you had it in 1906. There was a high early 1906 that came in. So it's like what came before is also similar to what's happening now. So there's a lot of evidence to say that we're probably going to have some kind of a correction. But the context right now is that we're in a more bullish version based on some other differences in the planets that indicate this year is going to be a more bullish version perhaps of 1964 and 1935 than the type of scenario that you had in 1906 and then 1994, which were more bearish the next 2 months. All right, that's the story. That's our preference in terms of interpretation of what's happening, and it's based on numbers, and it's also based on the planets. So I wanted to mention that on the 17th of February, on Saturday the 17th, we're offering 2 different things. The first one will be, we're offering our Trade Forecast Mastery course, and that'll be beginning. And also, on that same day, we're going to be offering a free class on how to use the matrix channel indicator. We've discussed it in the past, and it'll be an opportunity to get some education on how to use it to make money.